Welcome, ladies and gentlemen. Today is the 15th of March 2021. It's 10 minutes past 3 local time. This is a euro dollar on a 4-hour chart, trading at 1.19237. I thought I should make this video because, as you know, I document trades and predictions and analysis, but on a day like this, I should also document the more boring modes of the market. This is what I call a slow Monday. It's a typical slow Monday. Namely, we have low news flow, no big scheduled news today. In fact, on Wednesday we have the interest rates coming up in the US, and then on Thursday in the UK. So very typical for a very rangy, low momentum, slow price action Monday. And obviously, since Eurodollar is in that particular mode right now, it will affect other markets as well, because Eurodollar is the biggest foreign exchange market in terms of the daily volume. The good thing is the causality shows us that, this is a mode in a day where you should not risk your hard-earned capital, because, let me show you. First of all, look at this here. So both net money lines of the net money indicator are below the middle line. So we are in a situation where there's no squeeze. There's no squeeze against longies or shorties. So there's low money flow, and there's no big bias regarding the dump money positions. They're not significantly long or short. You can see that also here in the histogram. You have a mixed flow, some longies, the green bars, some shorties, the red bars, mixed, no big accumulations. And then on top of that, you see, even on the 4-hour long-term chart, that there are no big stops close to the price, no nice target clouds. Remember, those orange lines, there are limit orders, okay? If they would be yellow, there would be medium-term stops of the shorties. Of course, we have this medium-term stop of the money shorties here around the 1.1945 level. But it's not that this is enough to place any trade. Okay, and that's something I've explained before, and that's why I thought I should make this video. So, look, without some shorties, okay, some red bars, and without any squeeze, or at least increase in the overall the money shorties, you can't just place a trade towards a target like this. That's not enough. So just because you can see that there's the possibility that this level gets cleaned eventually, that doesn't mean that right now you can just buy towards it. Yes. And by the way, in the new video course, I will also explain to you in which situations you actually can place trades in direction of those targets. I just made a nice video for that, which will be published in the video course section soon. Okay, so keep that in mind. So to summarize, it's a very low bias situation. We don't have big dumb money accumulations. We don't have big stop accumulations. We don't have a strong bias. We don't have a squeeze. We don't have news announcements today. The price is just slow and very rangy, consolidating. There's low momentum in the market. The chart pattern itself, even on the short term on the hour chart, is nothing particularly pronounced. So it's not that we have a big grail pattern or some fake support, fake resistance, or a really nice plateau target level or anything like that. Okay. In fact, we actually have some short-term stops below the price there, but so in such situations, first of all, we do not place trades in that market. Okay. Because there's a low bias, so that means a low probability and low win-loss ratio. And secondly, even other markets, considering that this is euro-dollar, we take this into account. Yeah. Yes, it is possible that even on such a day, there's, let's say, suddenly something happening in Asia, and let's say dollar yen does a move on its own, okay, and that is not impossible, but it's quite rare, you understand? So normally, if the big pairs are in such a low bias range mode, other pairs will be affected. And then later on, if the volume increases, the momentum increases, and trading activity increases, then the other markets do their respective moves. But that's, by the way, something I've not elaborated on a lot to this point. One has to consider that while we have at least 22 different foreign exchange markets, the effective number of those markets is much lower, because obviously these are all correlated. So to give you an example, if we have the big ones like euro dollar, pound dollar, and then we look, for example, at let's say pound CAD, yeah. So obviously there's some correlation between pound dollar and pound CAD, because in that particular situation, since Canada has some correlation to the US, there will be some correlation between those pairs. But obviously, if you say, well, these are two different pairs, there may be much less diversification than you think. And obviously, if there are, for example, Canadian news scheduled, yes, and that dollar CAD will do a big move. Let's say dollar CAD has bad news for Canada and shoots up. Of course, this will push pound CAD up, and it may not necessarily push up a pound dollar. Yeah, you see that a lot. But if, for example, you have a trade in pound dollar, let's say you are short pound dollar, and then you want to do another trade, and you want to short pound CAD as well, you have to be careful, because you're basically increasing the same exposure. You see what I'm saying? Now, taking this into account, you realize that, first of all, the big pairs tend to dominate other pairs, yes. Secondly, there is much more correlation across those 22 pairs than you think. So be careful when you place trades and when positions accumulate, that you don't end up like increasing the same exposure over and over again. Yeah. Now, you may say, well, okay, fine, but even in stocks, people think that there are so many stocks out there, but they don't realize that the actual correlation is much higher than people think. I agree with that as well. It's true. Of course, you have stocks going up and down at the same time, but there's definitely way more correlation among those particular assets than people want to realize. That in turn implies that if they, for example, have a stock portfolio, that the actual diversification is much lower than they think, and their actual correlation to the overall market index is higher than they think. So yeah, it also is an issue in that particular asset class. The same with ETFs, like, for example, you have many thematic ETFs. They replicate a certain index, let's say green technology or solar tech or biotech, whatever, and these are selection of stocks, and they actually are more correlated to big indices than you think, which are also stock selection. So that token, it's the same thing when it comes to foreign exchange. Of course, when there are news scheduled, let's say Canadian news, they will typically move all the CAD pairs, such as Aussie CAD, Pound CAD, CAD Yen, etc. Definitely, and that these particular moves will move those specific pairs. However, there are at the same time correlations across pairs which are similar, such as I said, pound dollar, pound CAD, or let's say Australian yen and dollar yen. Yeah. So these pairs tend to have a correlation. And obviously the correlation is not a constant, it's dynamic. It changes all the time. The reason for that is dumb money. Yeah? The smart money will change the correlation across those pairs according to what the respective dumb money bias is in the respective pairs and in the input pairs. So that means if there is, let's say, euro dollar, Australian dollar, if euro dollar suddenly has many longies and therefore wants to go down and take the stops, but Australian dollar actually has some shorties, guess what? Euro dollar will go down, while Australian dollar will not go down to the same degree. So that correlation decreases because of the dumb money bias. However, if euro dollar has a lot of longies and wants to go down, and Australian dollar also has a lot of longies, guess what? They both move down together. So they have a higher correlation. You understand? Okay, I thought I just explain those points once more. And remember, I know those days are a bit boring. I suggest work on something else. Don't try to place trades just because you're sitting in front of your machine and you want to place trades and you have the feeling that you need to do something. You can't afford that, okay? In Forex trading, and that's the same for any type of trading, you need to have the discipline to wait. You need to have the patience. Yeah, like a hunter who is waiting for things to happen. You can't just go to the market and place trades and, just because you think you have to do something, push the button. That's a very bad idea, and you will lose doing that. Now, after 5 hours passed, 10 hours passed, or let's say there's some unscheduled news, of course the market can wake up quickly. It can happen from 1 hour to the next. And the longer you wait in such a market scenario, the higher is the likelihood that eventually something happens. Either the money flow comes in, or stops get pulled in, or market participants start to do stuff. So that's important to understand. When it comes to your own time management and management of resources and concentration, don't waste time sitting in front of your machine observing the price going 5 pips up, 5 pips down. There's no tradability, and this is not a good mode of the market to trade. So yeah, welcome to a typical slow Monday, the range of price action. So in those situations, there are many things you have to work on. Yeah, you may want to do some journaling, even in the context of trading. You may want to work on your tools, on your hardware, on your IT, maybe on long-term charts. Yeah, maybe on your trading plan. So many things you can do, many things you have to work on. So if you want to work on something on those days in the context of trading, work on these things. But do not focus on placing live trades, okay? Because the market right now just doesn't allow us to do that. Simple as that. And it's not that we are imposing anything on the market, but we have to accept what the market gives us, okay? All right. Stay safe, everyone.